We are watching the price of oil today as the market reacts to U.S. action in Venezuela following the capture of Venezuela's leader, Nicolas Maduro. U.S. President Donald Trump says the U.S. will be taking control of the country's massive oil reserves. And here to tell us more about how these developments are impacting the price of oil, what this means for Canadian oil markets, is Randy Ollenberger, Managing Director of Oil and Gas Equity Research at BMO Capital Markets. It's good to have you join us this morning. Thanks so much.
My pleasure.
Before we get into how this could affect the Canadian oil market, let's just take a look at the oil prices in general today as we start off this Monday morning. Anything you're surprised about? We're seeing them fluctuating, I guess you could say.
Yeah, I mean, the impact here, I think, is probably in line with expectations. We thought it could be modestly lower on the back of this, just given kind of the negative sentiment, and that nothing's really changed. I mean, the blockade is still in place. It's uncertain whether the Venezuelans are going to comply with U.S. demands. And so really nothing's changed today versus, say, 2 weeks ago. So we thought, maybe oil prices might be a little bit softer this morning with the prospect of a return of Venezuelan exports. But it's traded up a little bit. I think that just reflects the fact that, the blockade still is in place. And so that does mean a little bit less oil coming out of Venezuela. But the bottom line is the market is still oversupplied by 2 to 3 million barrels a day. And so I think negative sentiment at the end of the day on the oil price is going to win out.
We know that Canadian heavy crude oil is very similar to Venezuelan heavy crude oil. Is there a concern here that maybe the U.S. could be replacing what it imports when it comes to Canadian heavy crude for refining by Venezuelan heavy crude? Like, is there a concern there?
Absolutely. I mean, I think there is a risk here that if we do see U.S. companies return to Venezuela, start investing significant capital, that we see growth in Venezuelan heavy oil production. And the natural home for that oil is the U.S. Gulf Coast. We send around 400,000 to 500,000 barrels a day of Canadian heavy oil down to that market, and we would likely get displaced from that market. So we would have to move that oil elsewhere. We have some pipeline capacity to the West Coast that's available, but not enough to fully move that oil. So that would create some challenges for Canadian heavy oil producers, and we're seeing that reflected in the performance of those stocks today.
Is there an immediate concern, though, or do you think, like some experts are saying, that this would take a very long time when it comes to legalities that are required, also, production, just infrastructure in the area when it comes to Venezuela? Like, is this something we're going to see happen within the next 24 months, or do you think this is years down the road?
Yeah, I mean, I think it's going to take at least 24 months and more likely 36 months. It's going to take some time here. It's going to take some reinvestment. But, I mean, keep in mind, we could see Venezuelan production up to 1.1, 1.2 million barrels a day. In pretty short order, if the blockade is lifted and Venezuela is complying with U.S. demands. That could mean we could see up to 300,000 to 400,000 barrels a day of Venezuelan heavy oil coming into the U.S. market. We saw on average in 2025 about 140,000 barrels a day of Venezuelan oil coming into the market. So at the margin, you could see incremental heavy oil coming out of Venezuela in the very near term. And in the medium term, say the 24 to 36 month period of time, you could see substantially more Venezuelan heavy oil coming into the market. And that's really where the risk is. What
would it take? I mean, can you go through, maybe if you could, go through the process in terms of what it would take for the U.S. to start accessing more Venezuelan oil?
Well, I mean, the first thing, obviously, is there's a lot of U.S. sanctions in place. So Chevron's been receiving waivers, which is what's allowed them to bring their production into the United States. That's the 140,000 barrels a day that's coming in now. If those sanctions were lifted and Venezuelan oil production was, say, in the range of 1.2 million barrels a day, theoretically, you could see, up to 400,000 to 600,000 barrels a day of Venezuelan oil coming into the market versus that 140. So really just lifting the sanctions and allowing Venezuela to return to previous levels of production, which was in the range of 1.1, 1.2, that could be something you could see in very short order. Longer term, I mean, we're really talking about significant investment in the tens of billions of dollars to start restoring production to where it was prior to all of the sanctions getting put in place, which is around 2.2, 2.5 million barrels a day. And longer term, I mean, if you really wanted to think about where oil could go, I mean, prior to Chavez coming in 1998, Venezuelan oil production was in the range of 3.5 million barrels a day, with plans to go to 5 to 6 million barrels a day.
If Canada, I take your point that what you said earlier in terms of Canada needing to increase production and build more pipelines to stay competitive when it comes to Venezuelan oil. But if there's a supply glut kind of on the horizon, particularly for 2026, an oversupply of oil, is there much point in Canada continuing to build more pipelines when there's just an oversupply globally of oil?
Well, I mean, absolutely, because we do need to move some of the oil that we're already producing. So I mean, the alternative is to shut in that oil, which really doesn't make any sense economically. Canada is a low-cost producer. It's really just, we don't have the ability to fully move all our oil to different world markets if we're getting pushed out of the U.S. Gulf Coast. So, I mean, it doesn't make sense to shut in Canadian oil. Canadian oil is a very low-cost source of supply. It's actually lower cost than, say, the Permian, for example. So it really wouldn't make any sense economically to see that oil shut in. And so I think there's an economic incentive for the country to capture the tax revenue, to capture the royalties, to make sure that we're still seeing people employed in the industry. So there certainly would be an economic incentive to do that.
Okay, for investors that are maybe watching this and wondering whether they should invest in some oil companies today or looking at some of the prices that are out there and wondering what's going to happen in terms of this fluctuation, is it too early to tell, or do you think it's still maybe an okay idea to invest in Canadian oil companies, or where do you think investors should be looking at this time?
Yeah, I mean, I think, if you said you look at the oil price today and, it's $57, and let's assume it stays in that range of $55, $57. I mean, Canadian oil and gas companies can still make very good money at those levels. They can still grow their dividends, they can still grow their production, and they can still buy back shares at that level. So, I mean, I think the investment case for Canadian oil companies is still intact at these price levels, keeping in mind that whatever happens in Venezuela is going to take some time to unfold. 2 to 3 years out, I mean, who knows where the oil market will be, but certainly if we see higher levels of Venezuelan oil production, I mean, that could have some negative implications. But, we're seeing the stock sell off pretty aggressively today. I would argue that sell-off is overdone, considering it's going to take some time to see more Venezuelan oil in the market.
Right. Okay. So that's my final question for you then, right? Because what we're seeing today, obviously things are very fluid, things are moving quickly, and there's a lot that has to be considered over the next couple of days and weeks. How long do you think it will take before we see kind of a more steady price of oil after maybe the dust settles after what happened?
Yeah, I mean, I think we're going to have to just watch what Venezuela says. So we have a new president. She was sworn in this morning. So what is she going to do? Is she going to comply with U.S. demands? Are we going to see any of these sanctions lifted? That's really what we're watching, to see whether the Venezuelan government complies with what the U.S. wants and whether or not that is enough for the U.S. to lift those sanctions. If that happens, then we definitely will see more Venezuelan oil coming into the United States. Not enough that it causes a problem initially. It's really more that medium-term growth potential that creates a problem.
Okay, we'll have to wait and see what happens. That's all the time we have. Randy Ollenberger, appreciate your time this morning and your insight. Thanks so much for joining us.
My pleasure.
That's Randy Ollenberger, Managing Director of Oil and Gas Equity Research at BMO Capital Markets.